Hello, Maverick traders, and welcome. This is Ankit from Maverick Currencies here, and this is a market roundup for Monday, August the 29th. Hope everyone's doing well. Let's get on to it. Let's take a look at market price action for today and see how things moved. And as we discussed in our game plan for this week in the Currency Room recording, so make sure you go watch that recording first. That will give more context of what we're looking at this week. So looking at the market performance, again, we're seeing continued weakness. So we extended losses from Friday. SPX were down 0.67%, VT was down 0.55%, and cryptos had a bit of a massive jump today, but overall, again, still remains bearish. And we're seeing a bit of a mild day in gold and an up day in oil. So you can see today, it was an extension pretty much from Friday. The currency markets where we had a mixed price action, but outside of that, I think it was pretty consistent. So if you take a look at the SPX here, and we see that we're still on our working our way down towards that 50-day moving average. So I think this is the next level of support. Once we test the support, we will find if this is going to break or not. And if it does break, this is where we could see some acceleration in losses once we give up this key level. Now, same thing happening in the World Stock Index. As you can see, we are actually already at a 50-day moving average. And lastly, the Bitcoin, again, we're seeing a bit of a rally today, but notice that in the grand scheme of things, we have seen these pops, but the right call has not been on the upside, but more towards the downside. So, we need to see when the direction is strong and you get an opposite velocity, it's better to not chase that velocity because it's a better chance for this to roll over. So not much has changed in our outlook there. And as you see, the monthly market outlook has now shifted down to a 0, even to a -1 if you break that 50-day moving average. Again, this is not a positive momentum as we go into into the Labor Day weekend. The market looks weaker, and I think it's finding more reasons to sell off, especially on some bad data or some Fed speech. But on Friday, we were pretty clear by the Chair Powell that they're not looking to waver on their rate cycle, and that's again bearish for the markets. This week, again, it's going to be busier in the second half of the week. You can see there was not a whole lot today. But tomorrow we have Joel's jobs opening. I don't think any of this will have a big impact on the markets. The more bigger impact news events this week would be on Friday, which is the U.S. job support. And we have on Thursday, we have the ISM manufacturing PMI from the U.S. But I also think that the Swiss franc, the CPI, would also be important as well, since the Swiss data is also now in focus as well. So there's more activity later in the week, but I think for now, especially a day like today, it was a bit of a good day to kind of stay out of the markets. So let's do a quick currency analysis and see how things have moved percentage-wise and where to focus on. So we'll quickly scroll through the cryptocurrency, and again, one of the themes that continues to play out is that when the cryptos bounces, the Ethereum actually gets the biggest lift. It was up 8% today, but outside of that, Bitcoin Cash and Bitcoin were much lower compared to these percentages. So I think it still had a nice day, but not up to that extent. So again, that's pretty clear. Cryptos are, again, overall not looking good. But even though if you're looking for a bounce, I think Ethereum is still the right place to be. Now, the currency markets is where we had a bit of a shift, a bit of a mix-up, because you had strong trend scores on Friday, but the price action today was kind of on the opposite side. For example, Kiwi, it was down. The trend score is down -2. The velocity score is down -3, and then we're just seeing a relief, a bit of a rally today, performing the best along with the euro. But just realize that all of these things that are actually outperforming right now, they're actually are the underperformer. So as we always say, the direction doesn't go linear in one way. You get some pullbacks in between, and that's exactly what we're getting here. I think the big surprise today out of all was the Japanese yen, because yen has been sideways for the last, 2 weeks. It's been 0 on the velocity score. It's been actually 0 on the trend score, and it has a nice little breakdown out of that little no activity zone. So we'll be spending a little bit more time looking at yen, possibilities for yen, because now we are back to a key support in the yen, and then key levels of resistance in some of the yen crosses. Dollar, again, still looks good to me. Again, we're seeing a bit of a pullback, but I think these pullbacks are a good opportunity to buy into. So as the dollar pulls back, it really helps the Aussie and the Kiwi to kind of strengthen. But again, I think the theme is that as the dollar is very strong, it really weighs down on these growth currencies, except the CAD, which kind of end up managing to survive on its own here. So a bit of a mystery with the CAD, but I think outside of that, we're getting some predictable price action. Swiss franc did pull back a little bit. I think it's still just a pullback because the trend remains strong unless we make some trend changing move. Is that where we need to make an adjustment? So velocity score, again, we're seeing the opposite. We are seeing the cryptocurrencies are up in the +2 zone, Kiwi in a +2, and Euro in a +2. And on the other side, again, dollar was mostly flat. Aussie got a little bit more velocity in the CAD. So the real movement today was not in any of these currencies, but actually was in the yen. That was the big player, because it doesn't matter if you had Aussie yen, you had a Euro yen, you had a CAD yen, you had a Kiwi yen, even you had a Swiss franc yen. You got a nice move, because that's where you have to realize that it's just one currency that's making the run. So it doesn't matter what you make a pick. If you're getting the currency right, the direction right, there's easier setups to be had there. So that was the big mover last night. So let's take a look at possible trades, see if we can find something to trade here. Again, our goal is not to just trade because we need to make a trade. We need to trade if there's a good opportunity. A day like today where we saw an opposite of what we were expecting, I think it's better to be in cash. Now, looking at the yen crosses, I just want to briefly talk about yen, because yen is, after this no period of consolidation or this little sideways movement, we're getting a breakdown. We still have this support area to clear. I think the bigger move is likely to come if it breaks the support. And based on where we are, and we actually look at the distance, we are only 0.5% down, or 0.5% away from testing the support. So if I'm not really entered already, I think I would rather wait for this area to be broken to really get that move. And look at that, the area. I mean, we have consolidated this area starting June, July, August, 3 months. And we have tested this level almost 3 to 4 times. So be careful about that, because technically these setups will look great. But again, we're trying to find if there's going to be some sort of continuity to it as we go into the overnight and tomorrow. So outside of that, the dollar again still remains a good buy, again 4-hour chart. And I got a nice little pullback here, but I think pullbacks are just going to be decent opportunities to buy into. You can see that we go a nice breakout, pullback here. I still like the dollar to the upside. I think the trend score, when you see a +2 or a +3, is better just to trade it in one way of the direction where it's continuing to perform. On the other hand, you will have currencies that are just mildly bullish, which is where you just have to be less aggressive in a breakout. I mean, we saw a breakout today in the Swiss franc, but then you can see that very quickly got reversed. So is there a reason behind this move? Absolutely not. I mean, usually around this time of the year, you get these movements that are quick and fast one way or the other, but it doesn't really have a rhyme or reason behind it, because that's just a holiday trading that we always discuss. We are about 1 week away from the Labor Day. I think we should expect a bit more consistency in this kind of market environment. I mean, same thing. We had Kiwi that done really well. You can see everything was looking pretty weak overnight until we got a reversal early morning. Aussie, same thing. It was looking pretty weak. We got a reversal this morning. So if you were looking for trades this morning, again, you just didn't see things materialize because it just had rallies and stayed there. So if you're looking for a resumption of those trends, we need to see this kind of roll over again. But again, if you look at the timing of those trades, is there anything that is really speaking out or shouting out a buy or sell? It doesn't look to me. I mean, all the yen crosses looks like that, but again, realize the yen crosses also has some key resistance to kind of break out as well. Look at dollar yen, key to resistance level. We have Kiwi yen. I mean, we're still far away from that resistance, but outside of that, Aussie yen looks like it wants to break out. We have the CAD yen wants to break out again. So all of these, so it's not a breakout above the CAD yen, it's a breakout above the yen. So just wait for the yen currency basket to really give you the signal. We don't want to get in right now because of if there's a fake breakout. If there's a breakout, I would rather wait for the confirmation to kind of jump into. After 3 months of consolidation, we need to be careful about that, because the breakout, whenever that comes, and use more confirmation in order to follow that. Outside of that, I don't really have a whole lot of setup. I think dollar yen looks probably the best. Once it can clear above the 139 area, looking at a monthly chart, I think this can go all the way up to that 146 area. But again, for that, we need to make sure that it's actually breaking out and staying above that, confirming that breakout. Outside of that, we've probably got some rallies across Aussie, some of the dollar crosses. So Aussie dollar, we had a rally over here, but 4-hour chart, I still like it. We still made a little touch that a new low, had a rally. If this fails, I think will probably be a better chance to kind of jump into. But for that, might have to wait till the second half of the week for those trades to kick in. So remember, our goal is to find out what's moving and focus on that primarily. This is the kind of market environment we expect until later next week. We'll be more active around the news events. That's where our focus is mostly. But again, we're looking at the equity markets. I think it's going to find some support at 2050 SMA, but we're still looking to buy the dips in the US dollar. That's where the schedule goes. Again, there's a whole lot of content on it scheduled. Again, I'll be doing actually a class on Thursday, which is again not listed here, but on a Thursday we'll be actually doing a class on transitioning from summer trading into fall trading or even a regular trading environment. Again, this is the time to prepare for next week. This is the time to work on your trading plan, not chase something here. Again, it's the end of the month. Close out the books of August, focused on September, get your trading plan updated, make sure everything is all geared up in order to see the markets or capture some good moves in the markets. It's all about being the right mindset, so don't spend too much time looking at August, but now start focusing on September. That's the game plan. Thanks for joining. Have a great rest of the evening. We'll see you guys in the next update. Cheers.